Time for the word on Wall Street. Top investors watching your money this week. Joining me right now to talk about that is Stifel Chief Economist Lindsay Piegza, Rosecliff Capital CEO and Managing Partner Mike Murphy, and Mahoney Asset Management CEO Ken Mahoney. Great to see everybody this morning. Thank you so much for being here. Mike, let me kick it off with you. We're focused on jobs this morning. The November jobs report due out in about an hour. Estimates call for 469,000 jobs added to the economy, with the unemployment rate ticking down to 6.8%. It comes after yesterday's weekly jobless claims were better than expected. Your take on the impact here to markets and investing?
Good morning, Maria. It's great to see you. So we're sitting at all-time highs on the markets right now. So when we get this number this morning, I think it's more important to focus on the bigger picture than whether this number comes in at 400 or 500,000 jobs added. The bigger picture, in my opinion, is we hit this pandemic. It basically shut down the entire economy, and now we are recovering. We've seen great recovery from that, and that's going to continue. So whether the number comes in at 4 or 5, is that enough to support more new highs in the market? And for me, the answer is yes. I think the consumer is very strong. The consumer is going to be out this holiday season spending money. What I want to focus on, though, Maria, is where are the jobs? Because I can tell you for certain, startup companies, technology businesses are going to be replacing some of the jobs that were lost. So let's keep an eye on that, because some people won't be able to recover their jobs. They'll be replaced by technology when this is over.
So that's a good point. When you invest in small companies as a venture capitalist investor, where are you seeing the growth and the ability to create jobs, Mike? Are there areas, specific companies or industries you can mention?
Yeah, yes, for sure. I mean, when you look at it, Maria, one right off the top that has benefited from the pandemic, one area is private aviation. Wheels Up is a company where people aren't comfortable if they can afford it. They're taking private aviation instead of going to the airports. And then another one that we've talked about a lot is telemedicine. We're involved in several names in the telemedicine space. One is Keeps, or 30 Madison, and the way people are receiving their medication now has changed. Instead of going to the doctor and the medication will come to you. So those are two areas that I think are really going to benefit from this pandemic. Once we're past this, the way we live our lives for certain is going to be changed. It's going to be disrupted by a lot of private companies. And you're starting to see a lot of these private companies, from the big ones, the Airbnbs, all the way down to some smaller ones coming public through SPACs. So it's going to change a lot in the very near future.
Lindsay, let me turn to macro. The coronavirus aid, the renewed stimulus talks. Lawmakers remain divided on agreeing on a stimulus plan, with the president and Senate Majority Leader Mitch McConnell walking back the bipartisan $900 billion proposal. Do you think we're going to get something in the lame duck? And what's your take on the broader macro story right now? Are you expecting growth in the fourth quarter? The Atlanta Fed is looking at 11%, Lindsay, as you know.
That's pretty robust. And I think we have seen from the recent slew of solid economic data that the U.S. economy does continue to recover from that low in the second quarter. But I think it also may be masking in part the need for further artificial support from the federal government, as we do see the second round resurgence and subsequent policy measures continuing to wreak havoc on individuals and businesses, potentially then leading to further job losses and business closures as we look out to the end of the year and as we turn the page into the new calendar year. So right now it does appear as if growth remains solid, but the risk is very much to the downside. In fact, as we've talked before, depending on the depth and duration of the second round resurgence, the U.S. economy is in fact likely to slow significantly, potentially falling back into negative territory as we go out to that first quarter of 2021. That being said, regarding stimulus, any additional funds that are deployed from the federal government need to come so with additional accountability. As we've seen from the recent specifics of the first round of the PPP program, a number of large or questionable recipients of funds. So yes, we do hope for that fifth round stimulus package, but it needs to come with additional scrutiny and accountability.
Yeah, that's a good point. So what does this all mean to allocating capital, Ken? You heard Lindsay's growth outlook. The Dow Industrial is seeing its strongest month since the 1980s, in 1987 in November. Investors looking toward the end of the COVID pandemic. The Dow right now on track to open above 30,000. Look where we are here with another 0.25% gain. Ken, how are you allocating capital?
So we're actually taking some monies off the table because we have to follow our discipline, which is our escalators are overbought short term. Again, we're still very bullish, but we do have to kind of follow them a little bit. And look, I understand why the market's doing what it's doing. We have a lot of puts in place. We have a lot of kind of, let's say, circuit breakers here. We have the PAL put still in place, Fed funds at zero, asset purchases. We have a new put in place. That's a vaccination put, which is great, between now and, next year, between Pfizer, Moderna, maybe other type of companies that'll get approval. So that's really important to kind of make sure you have this base. And then finally, in real time, we have a stimulus put. Anytime things get kind of soft, lawmakers are going to get together and so forth. So again, we think it's very positive to have all these kind of pieces in place. However, to the upside, though, Maria, that's where we challenge ourselves. We have the S&P over 3,600. How do we get there? I mean, is it $180 per share earning? That's kind of stretching things. Give it a 20 multiple, get 20 times 180, gives you 3,600. That's stretching it also. So we're kind of in a point where, again, we think we've had a great feast, as Dr. Seuss would say during Thanksgiving. Oh, the feast, feast, feast. But maybe cutting into the Santa Claus rally a little bit because we are pushing up against valuations, though we do have some good downside protection with those three puts that I cited.
All right, you are worried about valuations here. It's a good note to make. Lindsay Piegza, Mike Murphy, Ken Mahoney, great to see you all. Thank you so much. Have a great weekend. Much more ahead this morning coming up.